Hello, my name is Andrew Milligan. I'm Head of Global Strategy here at Standard Life Investments. Now, we're in the process of preparing papers for the next quarterly Global Investment Group meeting in June. That's the opportunity for the senior fund managers across the business to come together and think what's happening in the world economy, where next. So as we prepare our research for this, what sort of questions are we beginning to ask ourselves? Well, let's start with the first of these, with the world's largest economy, the United States, and a key issue, which is how strong is growth in that economy? As some of you may know, actually the first quarter was really rather weak, pretty flat compared with the previous few months. Now, some of this does seem to be temporary. For example, winter weather was a problem, and there was a big ports dispute affecting exports and imports. Some of it does seem to be more cyclical, the strength of the US dollar, and some of it is really a bit of a puzzle. Households do seem to be saving rather more of their incomes than we would have expected. But nevertheless, we are seeing some quite strong employment growth in America, and on the back of that and continued expansion and investment, by and large we think the outlook for the US economy is relatively good for the rest of this year. And we still think the Federal Reserve can raise interest rates before year end. What about the world's second largest economy, China? Now, this clearly is decelerating, and we think some of the issues here are rather more deep-seated. This economy is going through a transition at the moment, away from exports and investment towards consumer spending and services, away from a reliance on local debt, where there are some major problems now, towards central government financing. Now, this transition is manageable. For example, China's got major foreign exchange reserves, it still controls the banking system, but it does lead to a slow economy. And that, of course, has implications for a number of emerging markets, for commodity demand and so forth. What about the world's third largest bloc, namely Europe and the Eurozone? Well, Greece, of course, here is a wild card, which could upset matters. But putting that aside, generally we do see a cyclical recovery here, helped, for example, by cheaper oil, the decline in the euro currency, and countries like Spain really taking steps to improve their competitiveness and benefiting from exports as a result. So, two of these countries, two of these blocs we see as doing quite well in 16. China, of course, will be a bit of a concern still. But nevertheless, putting all of this together, it still suggests a positive backdrop for corporate earnings, for company profits, and that at the end of the day is the key driver for equity markets, but also other assets like corporate bonds and even real estate. Now, we don't see this business cycle necessarily ending soon, even though it's been going now for 6-7 years. The reason for that is we still see most imbalances are under control. Recessions normally appear when there's an inflation or a current account or a debt crisis, debt imbalance. So far, we don't see that happening, although, of course, the Global Investment Group will be monitoring some of these issues. In essence, what we see is a multi-speed world, some very divergent growth rates between different countries in terms of money supply growth, the expansion of the economy and underlying profits and investment. And within this, there's going to be many opportunities for active investors, whether in equities, bonds, or currencies, for example. So, looking ahead to the Global Investment Group meeting, currently our conclusions are that we should stay with our pro-risk positions, especially in equity and in real estate. But we are becoming wary of valuations in some of these markets and other government bond markets as well. So this is going to be a key issue the GIG discusses, how much risk to add or whether to take some risk off the table. More details of our conclusions you'll find in the July edition of Global Outlook, and before then I heartily recommend the May and the June editions of the Global Perspectives, which gives our thinking on a number of issues like negative interest rates, the outlook for corporate governance in Japan, and of course the current edition of the House View. Thank you very much indeed.